Trader Theo here. This is the episode 7 of the chart setups of the week, where I walk you through high probability trade ideas and market breakdown. Starting with the Australian dollar against the US dollar, the price last week ended as a bearish candle with a confirmed swing high at this point. So followed by a lower low, the price bounced off the 10 weekly period moving average. There is a still bullish momentum. The price keeps the formation of higher highs and higher lows, and this has more bullish than bearish implications. As well, the MACD is above the zero line, which indicates that there is dominated by more buying pressure. Next one, euro against the US dollar. The market makes clear higher highs and higher lows. Last week, that long leg doji candle indicate that the uptrend might resume. At this point here, we want to see on the lower time frames, like if you trade the daily charts or the 4-hour charts, you want to see kind of change of market structure. Of course, on the daily chart, we won't see that, but we can see a reversal price action. If you drill down to the hourly time frame, this can become a very promising market if the price made a lower low, but the high it's up here. This is the high that keeps the market structure at this point, from this high to this low, and we have to wait for the price to make a high higher than the previous week's high to consider the shift in the market momentum. But if you want to get a bit more aggressive, you can start looking on the higher highs and higher lows at this point. But technically speaking, regardless if you see it in terms of news or not, this high the market created, it's the last price the market accepted as the highest, and we have to credit that to the euro US dollar. Next one, Great British Pound against the US dollar. The sterling was very weak. It's been 3 weeks now the sterling drops, and this previous week's low, it's exactly at the same area with the last month's low. This can hold for some bounces, I guess, because the price, if was strongly trading downward, the sellers will have penetrate this low. But what we want to see is on the lower time frames some kind of continuation. The 4-hour chart showed a strong bearish engulfing price action. The hourly time frame, it made a lower low, broke this swing high created at that point. So if the price keeps moving lower highs and lower lows, and if you want to wait for some moving averages crossing, then definitely we can look for short positions. Now, until when? Until these lows here or this low there, the previous week's low, because they can act as a strong areas of support. USD against the Japanese yen, the price made higher highs and higher lows last week, kept the bullish momentum. If we drill down on the 4-hour or the hourly time frame, it's even better. It shows a clear sideways market here. So for us to consider to go long and keep buying the USD yen, it's better if we wait for the break above the previous week's high to get out of this range. But it has more bullish than bearish implication, this market. Next one, euro against the Japanese yen. It's been 1, 2, 3, 4, 5, 6, 7, 8 weeks in a row. The market makes higher highs and higher lows, only with bullish candles. It's like the euro completely outperformed the Japanese yen. If the previous week's high taken out, we expect this high around 175 to be the next area of resistance. On the hourly time frame, if you want to trade the price actions here, we are still in a bullish momentum. Then we definitely like to buy the dips as the market progresses. USD Swissy, last week the price didn't make any strong bullish move, followed by this inside candle. It left this doji weekly candlestick around the inside resistance, and this can fuel some more push to the downside. That will be very interesting, and if you want to follow the higher time frame direction with the lower time frame entries. On the hourly time frame, we see the market makes lower highs and lower lows, and this last impulsive downward move was very strong, followed by some retracement here around this resistance. If you draw Fibonacci, you can also find maybe solid entries here, and we do expect the price to come all the way down. First target, it's going to be this one here, and second target, it's going to be the previous week's low. USD Canadian dollar. A weak US dollar followed also the Canadian dollar strength. Rejection at the 10 weekly period moving average. The market is at this bottom area, but again, it's more bearish than bullish, this one. On the 4-hour chart now, the price has this higher high formation, but what I like is that this high with that high, they are very close, in a very close distance, and we see that the sellers almost retraced 90% of the move, of the impulsive move. So this might have more bearish implications starting from Monday. If we break below this swing low, then definitely we can look for short positions. On the hourly time frame, it looks more clear that the sellers at this point completely reverse most of the move from this, most of the impulsive move created by primarily the buyers. So same scenario, price comes all the way down, penetrates this swing low, which holds the market structure from that high to that low, and we are good to start looking for short positions, I guess. Gold on the weekly time frame. The price remained as a doji candle, didn't make any upward or downward significant moves. On the 4-hour chart, market is, we can say it's more sideways rather than anything else, because this swing low here and that swing high, they have been equally, let's say, touched at this low on Thursday and on Wednesday with this high. So it's like a ranging market currently. I want to see the price to break outside of the range before I commit to any trades on this one, and I think you also want something similar. If you are trading some fair value gaps or fair value prices, this is an area potentially the price can test it, maybe anytime soon, who knows. US oil weekly time frame, bearish engulfing, follow the downtrend. That becomes very promising. To be honest, on the hourly time frame, I would like to see this structure, guys. We see this over and over and over again. Now the sellers looks like they took control because of these bullish candles. The buyers didn't manage to push the price anywhere higher, and what I want to see during the New York trading session, I prefer to trade the US oil, and I want to see the sellers creating some further move to the downside. But we're going to have a lot of candles to work with on the hourly time frame by the time the New York trading session kicks in. Platinum weekly time frame, look at this, followed by a higher high after these 2 weeks of consolidation, but the higher high didn't make any strong market structure. Therefore, if the price decline, we can see a kind of aggressive move to the downside for some correction, but let's wait and see what's going to happen with this one. Lower time frames, it's bullish structure, of course, with higher highs and higher lows. If you trade the trends on the 4-hour chart or any lower time frame, then you want to follow the trends. I'm saying that on the weekly chart, if we're going to see rejection and reversals, we can see a strong downward move. Bitcoin, the weekly candle hasn't ended yet. There are still 7 hours from now, almost 8 hours for the completion, and so far the price action is a doji candle. On the 4-hour time frame, the market moves a bit sideways. Daily chart, you can see more clear sideways here. Now the weight is on the Ethereum, guys, because the Ethereum, it was less appreciated while the Bitcoin having a solid run since March, let's say, but Ethereum didn't really perform in March. You see, it was declining, but after it found this strong area of demand, solid price action, the price bounced, and then long bullish candles. Now, we do expect the price to reach anytime soon the $4,000, and if the crypto market are still in a bullish momentum, we do expect to see the $4,800 as the all-time high to be tested again. XRP, it's on the scope. It created a new all-time high. Finally, we see the break to the upside. This all-time high, higher high, followed by bearish divergences, it can put the price into the retracement. What you want to see after this new all-time high, you want to see an explosive upward move. If it happens and we see explosive upward move, it means that the MACD crossover won't play as the negative divergences or reversal pattern, but it's going to be the beginning of a new upward trend. These were the setups of the week. Ensure you manage your risk on the trade, trust your edge, and trade with confidence. I will see you next time.